we make our own luck and luck also happens. So how does the average person figure out if this is working? And there's an easy hack.
Raoul Pal for the ordinary man. With crypto enthusiasts always on the watch out for his every move, Raoul Pal is back once more with his latest interview, within which he has ousted many hacks and secrets confined to the cryptosphere, regarding both understanding cryptocurrency and assessing its success. Don't forget to watch to the very end, as what he opened up about may really surprise you. Predicting the timing. The crypto industry is only in its infancy, and it's constantly evolving. That's a big part of why every new Bitcoin high can be easily followed by big drops. It's difficult to predict where things are headed long term, but in the coming months, experts are following themes from regulation to institutional adoption of crypto payments to try and get a better sense of the market. Let's hear Raoul Pal's take on predicting the market timing.
But recessions tend to be forecastable. And around that, you can start positioning yourself. So we're starting to see it happening in the US right now. We're starting to see the yield curve turning lower. Usually when the yield curve goes negative, a recession follows soon after. So then you're looking for business cycle indicators like the ISM survey or PMI surveys or sentiment surveys to start rolling over and going below 50, it is in the ISM, which tells you the economy started to potentially contract. Those kind of signals and then a bit of technical analysis will give you the timing. Now, there's no 100%, there's no certainties in this world. All we do as investors is look for putting probabilities in our favor.
Secret behind percentage of success. Bitcoin is a good indicator of the crypto market in general because it's the largest cryptocurrency by market cap and the rest of the market tends to follow its trends. But how high will Bitcoin go? Plenty of experts say it's only a matter of when, not if, Bitcoin hits $100,000. Bitcoin's past may provide some clues as to what to expect looking forward, according to Kiana Daniel, author of Cryptocurrency Investing for Dummies. But Raoul Pal has his own take on assessing the percentage of success.
There is a secret here. There are two types of drawdowns that you get. You get corrections and you get economic bear markets. Right now, across the world, we've been seeing markets sell off. Well, if we go back to my framework, the ISM is still positive. Global growth is still positive. Yes, it's rolling over. Yes, the yield curve's coming, but none of the economic signals are there. So really, you have to be quite lucky to capture those events. And I would say I probably get, it's a very 50-50 hit rate, maybe less. If you get the other one, which is all the economic signals stack up, then I have a 100% hit rate.
How crypto helps our currency.
Usually when you have currency weakness, you have higher inflation. What's interesting is cryptocurrencies, international product, and they tend to be anchored in limited supply. So Bitcoin has only 21 million Bitcoins that ever be created. So you have a digitally scarce asset, kind of like gold, but it fits in this new digital India world. All of these things can connect easily. People are used to wallets and transactions and those kind of things. So it allows you to put savings in something that doesn't get devalued over time via inflation or falling.
Question of crypto adoption to battle inflation. The question is not if global adoption of cryptocurrency will happen, but when it will happen. The exact timetable is tricky to pin down. Mass adoption could take place in 2 years, 5 years, 10 years, or more. However, the point is that it will happen, and there are objective benefits to learning about cryptocurrency before mass adoption comes. But what are the ways adoption could help battle inflation?
Well, the only way you do that is for the central bank to have it on their balance sheet. Could they in the future? Possibly. There are some central banks that are already doing so, or sovereign wealth funds that are doing so. It's possible, but that's not going to come.
Giving value to futuristic assets. Metcalfe's law is a simple statistical rule of thumb for thinking about the value of network technologies, and not a complete description of these assets' fundamentals. Yet, it's often been cited to presage a surge in the price of Bitcoin or even predict its collapse.
So this whole world is all about Metcalfe's law. Now, there's no easy Metcalfe's law, just plug it into my computer and it gives me a fair value, right? So you have to estimate it, and you're estimating it by looking at, is the network growing? Are people building things on it? So you make some forecast based on that.
Talking in layman terms.
So how does the average person figure out if this is working? And there's an easy hack. So go back to the charting, my technical analysis. All of these assets, these digital assets, Metcalfe's law is exponential in nature. So it means when you draw a linear chart, it always looks like this. Most people go, it's a bubble. Endless thing, it's a bubble, it's a bubble. And you would have done the same with Reliance, you would have done the same with Google, Facebook, Tesla, all of these. And you would have got them wrong every time because these were network stocks. So what you do to value a network stock is change the scale on your chart to log scale.
Okay.
And then what happens is magic. Most of them end up being in this beautiful channel and they go up and down in the channel. That channel can be 50% because it's log scale. The channel essentially shows you network adoption.
Managing your nerves and risks in crypto. Owning a currency that some people say is a fraud and others say is the future can be an emotionally intense experience. So, wondering about how to manage your nerves and risks in crypto is perfectly normal.
As you know, being a trader, it's all about position sizing and it's all about risk appetite. If you are 30 years old and you have some savings and you want to take risk because you don't have as much as you'd like for the future, but you've got a good job, go ahead, take the risk. Make a calculated, thoughtful risk, not just buying an option and hoping a stock goes up. But if this is your thesis that cryptocurrencies are going to go from $2 trillion to $200 trillion, which is my thesis, I think it's the biggest opportunity I've ever seen, and they're going to be the largest wealth accumulation in all history in the shortest period of time.
Crypto growing twice the speed of internet. Data shows that the number of Bitcoin users is roughly the same as the World Wide Web had 20 years ago, back in 1997 when the internet was at an early stage. However, this data isn't new. At the beginning of 2021, some experts noticed that Bitcoin adoption is expanding much faster than the internet. As per their expectations, there are likely to be 1 billion Bitcoin users in the next 4 years, which the internet had back in 2005. Although both the numbers are estimates, this likeness holds a point. 1997 was when internet users crossed the vital threshold of 100 million. In 1997, the number had reached almost 121 million.
The network adoption currently for crypto is growing twice the speed the internet did with the same number of users. So back in 1998, the internet was growing at 63% a year, had about 500 million users. Crypto's about 500 million users now. It's growing at 113% a year, which means it gets to 1 billion people by next year.
Devices to manage your capital risk.
So here's the magic of Bitcoin or crypto, all of crypto. You're thinking like somebody who's lived in a banking world. But the difference here is you can store these assets and you should yourself. So it's called cold storage. There are little devices like a Ledger Nano X or a Trezor. And they basically, your coins on the exchange, they may be commingled with other customers, but you transfer it to your wallet, you own it. You'll hear an expression in crypto, not your keys, not your coin.
Technical strategy for investors. In the volatile world of crypto, you will need nerves of steel, a winning game plan, and an intuitive trading platform if you want to win. You'll find the nerves of steel and intuitive trading platform through research, and more research. There are plenty of trading strategies out there. Some of the most popular day trading strategies include range trading, scalping, and arbitrage. But have you ever wondered what's the exact technical strategy for investors?
As an investor now, you're basically having to be a VC investor. You're needing to decide what basket of digital assets do you want to own that you think are going to do well over time. Now, what's the right time horizon for a long-term investor, for a decent investor here? You probably should be 3 to 10 years because we're talking about network adoption at scale that's going to billions of people. Then you probably want to spread it across a basket. The most proven two protocols are obviously Ethereum and Bitcoin. So you're probably heavily overweight those, but maybe you want some DeFi and you want some of these layer ones we talked about. And what's different versus VC is it's actually liquid. So you can change your mind. In VC, it goes to zero or it goes up in venture capital. But this, you can change your mind. Then I would look at the longest time horizon chart that you can. Bitcoin goes back to 2009, 8, and Ethereum back to about 2015. And you start drawing the biggest charts that you can. You can use the cycle of Bitcoin and Ethereum to understand where the whole market is, because the other charts, some of them are only 18 months old.
With that, we come to the end of this video. Consider subscribing to join in next time for more of such interesting content.